Hello traders. I want to show you all something here. Let me just get rid of that for a minute. Okay, so today we opened at 9:30 right here. I'll just mark it out for you. 9:30. This is New York time, so I'll put it at 9:29 so we don't obscure the candle. Oh my gosh, that's not what I wanted to do. Okay, so we opened right here. We traded up. We had a little news report come out, ripped down, took out the lows, back up, a little bit down, and we went all the way up to here. And then we started reversing. You can see we kind of leveled out there and there. Our goal as traders is to try to predict some of this movement, try to get some sort of an idea of where the price may trade next. We're not flipping a coin and just grabbing a position and hoping it goes our way. So my goal in showing you those levels last week was to show you how important they are with this video. Okay, so the opening gap, where a price traded yesterday versus today, where we opened today. So this blue box, I know there's a bunch of stuff on here. Right here, where you can see all those four dots. This box represents where we closed yesterday up here and where we opened today. So there's a gap there, and I highlighted it with that blue gray colored box. Okay. This yellow box is from the daily chart. It's a fair value gap on the daily chart. Actually, I'm a little off on my drawing there. There we go. So there's the fair value gap on the daily. This white line represents the center point of it, and that's a lot of times where the algorithm will refer. So I'll mark that out. Now let's look at this little box right here. This box is the very first fair value gap of the day. Oftentimes the algorithm will note that and refer back to it several times throughout the day. So we opened, we traded down a little bit, and then we started going up, made about 25% of the gap fill. We know this line is a 75% gap fill. 70% that it's going to fill the halfway point of that gap. If you didn't have that on your chart, you wouldn't know where that was, so you wouldn't be aiming for it. So we come back down into the very first fair value gap of the day, which runs from here to there. This little candle right there represents the gap, and we kind of just meander around it for a little bit. And then we shoot up to, what's this? This is where we opened yesterday at 5. This is the close at 3. This is where we opened at 5 versus closing at 4. So that's called end dog, new day opening gap for today. So we trade up through the center and we trade up to that end dog. Why did it stop there? Because it's an end dog. If you don't have that marked on your chart, you wouldn't know. That could be an aim point. So you got in here, that's your aim point, or at least halfway point. So we've touched the end dog, and then we do it again right there. But we don't get quite as high as that one. What's that telling you? We're probably going to aim down a minute. 10 o'clock New York time, the jobs report comes out. And we shoot this giant 1-minute candle all the way through all this mess, past the open, and into the consequent encroachment, the halfway point of the daily fair value gap. And then we reverse back up just as quick as we came down. This is a 1 minute. That's probably, if you put it on a 15-second candle, I'll just do it for you. That whole move happened I don't even know where we are now. There we go. No. Yeah, maybe. No. I'm going back to the 1 minute. I'm lost. Okay, so This is that 1 minute candle. Zips all the way down. Nah. This is that 1 minute candle from a broader perspective. It zips all the way down to this fair value gap, center. Then we start trading back up. Where do we go? The halfway point of the gap, and we come back down to the very first fair value gap of the day that we highlighted earlier. Look at those wicks. Boom, boom, boom. 4 times it hits it. You could put a limit order to go long right in the middle of that or at the top of that, and you'd be safe because we're not going to revisit this area. We already took out the lows. Where do we trade up to? We take out these highs of the end dog. We come back down. This is made a fair value gap. This candle right here, you'll notice it's about the same height. The candle filled the gap, but the body did not. The bodies tell the narrative. That one would be a scary one to hold, but if you got in down here, you would still be okay. Knowing that the likelihood of this gap filling is pretty high. So you could put your take profit up there and be pretty safe for some low-hanging fruit if we're going to fill the gap. Or at least get back to the end dog. Keep rolling along, rolling along, rolling along, and we just keep going higher. We form this fair value gap here. On the way up, where do we trade to? As you're looking at it as it's going up, you have to look back at yesterday. And you have to start marking stuff out over here. The first thing I marked out was this big fair value gap right here, thinking, oh, it's not going to go any higher than that. Then I was thinking it's not going to go any higher than that. And it just kept going through them and through them. And so then I marked this top one. A lot of times when you see a run of big white candles like this, the algorithm will refer to the last up close. So there's the last up close. That's where a lot of people would put their stops. Let's just mark a little mark on there. Make sure I get it perfectly right. Yeah, that's pretty close. Okay. And then we have this fair value gap here because it would have been the next one it needed to push through or reject from. That's why I put it in there. Now let's fast forward back to right where we are now. And where's our high point of the day? Right there. See how it wicked through that last up close candle on that run down? Respected the fair value gap. We didn't even get into it. And then what did the price do? It put up a reversal. Now, as it's going up, I'm marking out fair value gaps. There's one right here from that candle to that candle. They're for reference later in case they become an inversion fair value gap. Price will go through them, trade back to the center point of them, and then continue down if they're an inversion. So there's one there. And there's a nicer sized one here. Bottom of that candle, top of that candle. I don't have it marked out exactly to the tick, but I'll go ahead and move that. Okay, so then we start coming back down. Is this a reversal or a retrace? Well, we know we made it through that blue candle over there, and then we started pulling back. We just ticked right through it, right above it, and we start pulling back. We create a fair value gap, and we don't even trade back into it. But this one, we go to the bottom of it, and we continue down. Scare us with that one because we took out this liquidity. It could be going straight back up again. So we're not in the trade yet. Then we continue down into this fair value gap. We trade through it here. We come back and we start respecting the center point of it. The bodies need to stay below this top. They can inch into it a little bit, but they need to stay below. Everything needs to preferably stay below the center point. So we watch that. This one kind of bites into it. That one stabs above it, but we're still pretty close to the center point there with the bodies. This one opens and trades down. As soon as you see that happen, you can put an order in at the base of this thing with your stop above it. Just put a limit order at the base of this thing. And then we're moving along. These candles wick up into it. They fill your order. Where are we aiming to? We have to look at over here. We have a really nice single candle there. Got to be stops underneath it. So we can definitely place our order there. Or we could even aim for the end dog again. Let's see what happened. We fill here. It goes down. Pretty nice. Pretty quick too. And that's what we want to see. And we fill, if we had our order there, we filled there. If we were still in the trade, we would have filled here. Once we get to the end dog, we consolidate a while. Now where are we going? This is the end dog right here. New day opening gap. We went to the top of the opening day gap here, opening range gap rather, and then back down to the end dog, zigzagging back and forth. And then we come up here, and where do we trade to? Pretty close to that fair value gap right there. There's also a volume imbalance right here. That's probably what we were targeting. And what happens when we hit it? We zip right back down to the top of the opening range gap. Now, I'm just waiting because I don't take trades between 11 and 1 and just trying to find a narrative here. Okay, so we definitely wanted to reach back up. We did not take out the high. We came back down, went to the top of the opening range gap, and now we've traded into this fair value gap. Bodies have gone all the way through it. This is all balanced range, so we're just wondering, where's it going to go next? This is not a location you'd want to take a trade, but I do have all these reference points. What I would like to see it do is come all the way back down here and take out this low, and then finish the day taking out that high. That's what I would like to see it do. Will it do that? I don't know. I'm not taking any trades right now. I'm just watching price action. But I just wanted to show you the importance of having those levels, how price behaves. Why would it stop there? If it wasn't for that candle over here, that little blue one over here, why would it stop there? Has nothing to do with buyers and sellers in the market. It's an algorithm saying we're going to offer to right there, and then we're going to offer lower. Having those levels marked out on your chart is absolutely essential to making profitable trades. It gives you something to aim for. Will you be right every time? No, especially not in the beginning. But as you watch, as you learn, let's look at yesterday while we're here. Okay. See if I can find it. It was such a big drop yesterday. It was crazy. I think I still have all the levels marked. Yeah, right here. Let me make sure we're at the open here. Okay, there's the open, and here's the gap from yesterday, from where we closed on Monday to where we opened yesterday. And you see how that didn't even get filled? That's a good indication that we're going to have a directional day. It doesn't even try. But what I wanted you to see was the first fair value gap of the day. Let's see. Maybe I'm making a mistake. Maybe I'm not remembering this right. Is this 9:30? All right. Yeah. Here's the first candle of the day is right here. Okay. And we open lower. That's not your gap because it's the first candle. Just pretend like those aren't there. We're watching for our very first fair value gap of the day. And it's tiny. It is a little bitty one. But if you look at this one right here, the bottom of that candle, top of that candle, this candle would be our first gap. Now watch how price reacts to it. This one trades up through it, comes back down. We're doing nothing. This one offers price way lower. See that? And this one lower still. It even creates another fair value gap. At that point, there is no harm in putting an order here, just in case it returns to it, for a sell. Since we opened and pushed straight down, put one there. See how it comes up? It respects it there, comes back again and respects it there. This one, we go over it, we take out these highs, but once we go through it again, this fill right here would have earned you a huge amount of money. Just watch that right there, and I'm going to shrink this chart down. Watch this line, and I'm going to just make it back to where it was. Okay. It was a 400-point drop. This line right here. That was where your short entry would have been. We travel through the end dog from 829. We do stutter a little bit around the center. Then we go into this slow roll consolidation. This is Friday's low. We finally break through Friday's low with a fair value gap. Continue down the remainder of the day to the top of the fair value gap on the daily chart. And we ended up going into that end dog there too. And then continued on the way down to the center point of the fair value gap, where we meandered around all night, came down here, touched it 2 or 3 times. And then the open, and then the job report comes down and hits it again. And off we are to the races to fill this gap. I don't know if we'll revisit this. Maybe we will. But my point is absolutely essential that you mark these. You learn how to mark these. You take the price at 3 p.m. the day before, whatever the close was, and then the open at 8:30, and that's what this blue box is representing. This is just fair value gaps. All these yellow boxes are fair value gaps. The end dogs, new day opening gap, new week opening gap. Let me remove these for a moment, and then you'll be able to see easier. Okay, so like today, we had an opening gap. The bottoms of these candles, this one represents a white candle that closed lower, so this is the close. You could put a purple line right there. I already have one. You put a purple line right there and label it end dog for today. And then you put, this is the open. We opened lower, but then went higher. So this is the open of that candle. So you put a purple line right there on that and label it end dog 8-4. You can go back through here anytime there's a difference. That's a little gap, end dog right there. This is on a daily chart. Make sure you hit the D up here. This one's not very big, but it's still one. Mark it out, end dog, and you just label it the date of the candle that started. I can't see it because of my little thing. Stop recording. That's so you would label this one 8:15. We can come up here and take a peek at some others. This one's basically level right here. So you could just mark that with one line and say it's the open for that day. No end dog. But you can see anywhere where they're not even, that's an end dog. We closed here and we opened there. We closed here and we opened there. We closed here and we opened there. That's a big one. So that's what you want to mark out, your end dogs. At least 5 days worth of end dogs. The new week opening gaps would be from Friday at 4 to Sunday at 5. And so you'd want to mark those as well. And we would call those end walks, new week opening gap. Okay. So this was Tuesday, Monday, Sunday at 5. So this would be our end wall, that little bitty one right there. That's Friday, Thursday, Wednesday, Tuesday, Monday. This is Sunday. So we closed here, open there. That's our little end log right there. Just not very big. Sometimes these are really big. That's Friday, Thursday, Wednesday. Not much of one. But that's what you're doing. You're just marking out these opening gaps for the end logs and the end dogs on a daily chart. And then once they're on there, you want to have at least 5 days. But you can see I got them all marked out. And that's what oh man, I just moved something, I thought. And that's what these charts are referring to. Yesterday, we opened and went straight down. So this whole area has not been traded in on the New York session, all this blue area. So I'm thinking we're going to target that probably when the numbers come out on Friday. That we'll be targeting that area. You can see all my end dogs. End dog, end dog, end dog. It gets to be a lot once you get all these things on your chart, but they are pretty important. That's why I say you can only have 5. You don't have to leave them on your chart. You can write them down on a piece of paper, but you need to know the levels. If you don't know the levels, you're flying blind. Let me show you one more time. I'll just do it at a little bit shrunk down version. Today's action only. How it responds to those levels. Boom. Boom. New day opening gap. End dog. The last up close candle and a big rundown. Another fair value gap. Inversion fair value gap. Traded up to it. Now we're about, or we may be inverting it again to come back down here. Who knows what we're doing next. Top of the opening gap, which would be yesterday's close, versus where's price going next? Search me. Use the levels. Be kind to yourself. Be kind to one another. I love each and every one of you. Good luck. Good trading. I hope these tips help you out. I want to see everybody that tries this endeavor to be successful, and it is not an easy endeavor. It is not at all. So I wish you the best of luck. If anybody has any questions, feel free to contact me. If you don't know me, I'll be you can just send me a message in the comments section of the video. If you do know me, just hit me up on Facebook, call me, whatever. I do have a Facebook group called I Trade Futures. If anybody is interested in joining that, you're welcome to join that. I post a lot of the videos on there, a link to them anyway. So y'all be good. Talk to you next time.